Hey, ladies and gentlemen, how are you doing, folks and folkaroons? Good evening, good afternoon, and good morning, ladies and gentlemen. My name is Dr. Greg McLeod, and welcome to another edition of Bulls versus Bears, the weekly Forex forecast. And this is welcome you here. This is a beautiful Saturday here in Las Vegas. We're going to go ahead and look at what I'm looking at for the coming week, and and look at the trades that I'm looking at in my own personal trading account. Okay, so none of this is going to be a recommendation for buying or selling. This is purely for education purposes only. And let's go ahead and get started. I'm going to share my screen with you. Okay, hope you guys are doing well and you're doing great on this beautiful weekend. Okay, and there you go. This is brought to you by Lead Traders University. This is our company. We're devoted to helping traders to become professional prop traders. And so that's what we do. And we do it in 90 days or less with our patented methodology for getting in and out of the markets based on my 30 years of Wall Street trading experience, working at the world's largest Forex broker dealer in the world, and working at some of the largest financial institutions and banks on this planet. And that experience is available to you, okay? Now, this is, again, Bulls versus Bears, and here we go. Let's get started. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And again, I've been doing this for close to 30 years, and I've developed different scalping systems. I graduated from UCLA, got my doctorate degree in the Christian leadership and business. And all that to say that I'm uniquely qualified to help you learn more about how to trade the Forex successfully, okay? So these are the kind of things we're gonna look at. We're gonna look at dollar index, euro dollar, pound dollar, Aussie dollar, dollar yen and CAD, dollar CAD. We're also gonna look at the gold, silver, oil, and the S&P 500, some economic news. We're actually gonna start the economic news. We're gonna start with my favorite tool to trade the markets, my top secret weapon in the markets. And I'm actually going to change the share here, right? We're going to have a new share. Let's share screen number 1 here, and share. And we're going to go to my market heat map. My market heat map is an arrangement of currency pairs by percentage change. It's a financial scanner, and it's like an all-purpose tool. Lots of things going on there. We have 6 powerful heat maps to help you. They're gray right now because it's the weekend. And usually these will flash and turn different colors and move about to actually give us an indication of what to trade in the market. Because one of the biggest problems that traders have that I've come across is not knowing what to trade and when. And this is a powerful tool for helping you do that. Now, you can get access to the first of 6 heat maps for free. Just go over to mymarketheatmap.com, and then you can just scroll down, even though we're having a sale right now, but you can use it for free. Unlimited, and then go to the economic calendar right there. If the economic calendar doesn't load up, what I do is I refresh the screen, and we will refresh, and we'll show what's going on for this week. And then what they'll do is we'll pair this with what's going on in the currencies in the charts. Okay. Now, the economic calendar is, I call it fun with flags. If you ever watched Big Bang Theory with with Sheldon and his girlfriend, Amy, the fun with flags. So we're going to look at the flags. We're going to have finance with flags, right? So we're going to look at the flag, and that's going to tell us what to trade. So we start off with high impact. I like trading high impact items, actually. This is a medium impact. I'm going to go to filter, and I'm going to uncheck the medium ones, and I'm going to save this. And this will filter out all these countries, and we'll save that. And now we have the high impact items for the upcoming week, and then we can see some more. Okay, so we're going to start with Australia. Australia is usually our first market. New Zealand, we have Wellington, New Zealand is the first Forex market that's opened on Sundays around 5 or so p.m. Eastern time. And we have the Aussie Westpac Consumer Confidence Index, and it's high impact item. The previous number was 79. The forecast, or what is predicted, is 81.5. And you might say, well, Greg, I don't know what the consumer confidence index is. Well, it's going to impact the Australian dollar. And it's basically, how do consumers feel about their financial situation? If they feel very confident, very happy, that means they're going to buy more things and support the economy. And that's good for the currency. So we see a difference. They predicted that it will rise from 79 to 81.5. That's usually bullish for the currency. And we could see a rise in the Australian dollar. Okay. So, and we also have, that's at 8:30 p.m. on Monday. So that's going to be a good evening. If you're like, I love the Forex for that very reason, because you can trade in the evening, you can have dinner, go out, and then, to spend time with family, and then turn your computer and make some money before you go to bed, right? And we have some more Westpac consumer confidence change. It's supposed to change from negative 7.9 to positive 3.2. That's what the forecast is. The actual number we don't know. But if this is true and we come up with 3.2% or higher, usually the bigger the beat, or the beat is the actual number, how high it is above the forecast. Like if these guys say 81.5, but the actual number comes out at 90, that could really cause the Australian dollar to go higher. You said, well, Greg, I don't like looking at news. I don't even understand what any of this stuff means. But I tell you what, if you stick your head in the sand and you don't look at the news, well, I found out that you get Bernanke or Greenspan, and you don't know what's going on. You're in a currency and something happens at a certain time and you don't know. Then shame on you, because it's on the calendar. They tell you what's going to happen. They tell you what's actually going to be moving. So why are you trading Canadian dollar at this time? Oh, because I like the Canadian dollar. It's my favorite, and I know all about the. Well, guess what? Canada's closed at this time. They're asleep. So you're knowing what times to trade is very important, and knowing what's active and what other traders around the world will be looking at. They're going to be looking at Australian dollar. They're going to be looking at the New Zealand dollar, because they're geographically close. And those currencies are going to move during this time period, okay? Now at 9:30, we have another Australian news announcement, the NAB business confidence. So now we have consumers confidence, now we have business confidence, and it's supposed to rise from 0, which is pretty low, wouldn't you say, to 2. Wow, that'd be a big beat. If it comes at 4, and we have all this other positive news coming out at 8:30, well, guess what's going to be in play on Monday at 8:30 p.m.? The Australian dollar. That's something you should be looking at. Now, you may not trade the actual announcement, but if you wait 30 minutes to an hour afterwards, that's going to provide you your entry, okay? And I teach that in our news phase strategy, which I'm going to be talking about on Thursday. This Thursday at 8 p.m. Eastern time, I do a free weekly webinars to help you, give you free information to help you trade better and to understand how the market works, okay? And also get a sample of how I teach, how I coach, and how I help people. I'm gonna give you actionable trading strategies and approaches to the market that I use in my mentorship class, and you'll be able to learn while you earn, right? Okay, so let's go ahead for Tuesday. Tuesday, we're going to check the flags again. I see a British flag called the Union Jack and the pound. GBP is a great British pound, okay? Britain, England, UK, all that means the same thing, okay? And they have a claimant count change. And we say employment. They say claimant, like claiming employment claims, right? So they say it a little bit differently, but it's the same as ours. And the previous number is 46.7 thousand. The forecast calls for 22,000, so call a reduction in claims. Okay. Now, more people working is usually good for the economy and good for the currency. So we could see the pound rally significantly if we come out. The actual number actually comes out higher than the forecast, right? But they're actually calling for it to actually drop. Okay. And now, what we've seen, like we have in the United States, good news, bad news was actually good for the stock market and good for the markets for risk on. And the pound, we saw the dollar actually drop and other currencies go up. It's a little bit different for non-US countries, okay? In this case, if we see the claimant count actually decrease, right? Here in Great Britain, well, we actually could see the pound actually rally, okay? So it's not backwards like in the US, that's it, where people who lose jobs and the market goes higher. Here, people will have more jobs and actually the pound would rally, okay? So don't apply that, what's going on in the US claimant count with the UK. Now, if this number actually goes higher, right, then that would be negative for the currency. Okay, that means more people are unemployed. Here we have people who are unemployed. Now we have less of them. Okay, unemployment rate. They're actually calling for the unemployment rate to rise from 3.9% to 4%. So that's very interesting. Well, if you have the number of people who are on unemployment drops and versus the unemployment rate actually going up, it could mean that people are giving up looking for jobs, or maybe they're going into the gig economy and they're not looking for jobs. They're just, finding, some other hustle to make some money. And so they're not counted. And so that actually caused the unemployment rate to go a little higher. Okay. At 5 a.m. we have the Eurozone, and the flag is Germany, and Germany is one of the largest economies in the Eurozone, a big driver of GDP. Germany, France, and Italy, and it was the UK used to be part of the Eurozone, but they, the Brexit, they booted themselves out. So we look at anytime you see maybe a German flag or an Italian flag or the Eurozone flag, this is a ZEW economic sentiment for Germany, and it's supposed to actually increase or actually drop from negative 10.7 to negative 13. Okay, so that could be negative for the euro because we actually have a negative sentiment. It's more negative, right? So more negative, and this could impact the euro negatively, right? Then the big one, 8:30 a.m. is our U.S. news cycle. 8:30 a.m. and 10 o'clock, we have 2 times for news cycles in the U.S. And we have U.S. inflation rate year on year. See the American flag, right? Year on year, inflation is supposed to drop from 4.9% to 4.7%. And that could be very bearish for the US dollar, bullish for the stock market, and bullish for all the other currencies against the US dollar, except the yen and the Swiss franc. But for Aussie dollar, pound dollar, Canadian dollar, all should rally if this is true. And if this comes out even lower than the forecast, like at 3%, then that will set off a major rally in equities and a major rally on risk on currencies, right? And I think I might talk about, before we talk about news, maybe talk about risk on and risk off currencies. I think maybe having a workshop on that might be something we should do on Thursday. And then the following Thursday, we can talk about the news. Because a lot of people, risk on, what does risk on mean? I'm not taking any risk. And, what's flight to safety? Words like risk on, flight to safety, because there's a teeter-totter between the US dollar on one side, with the Swiss franc on the other side, with the and the Japanese yen on one side. Make sure my microphone is on. And also we have Aussie dollar, pound dollar. The big dogs are on the other side. Actually, the smaller dogs. The big dog is the dollar, and they go in the opposite direction because everything is priced in dollars. The dollar is the reserve currency of the world. So we want to look for this kind of risk on. Risk on means it's good news. The stock market's rallying. The stock market goes in the opposite direction of the US dollar usually as well. And so lower inflation would mean that the Fed does not have to raise rates. If they don't have to raise rates, then the dollar doesn't have to appreciate. So we could actually see a fall in the US dollar. So how will we trade this? I will look at the euro, and I'll show you some charts. We'll actually look at the euro, okay? The next thing that comes out at 8:30 is a whole bunch of this is like the USD show for 8:30. We have core inflation rate year on year, supposed to drop from 5.5% to 5.4%. And that would be a good decrease, which would also, now the difference between inflation rate and core inflation rate, the inflation rate here includes transportation and food. Food and energy. Food, energy, transportation are very volatile. They can change a lot. I use food. I use a lot of food. You can tell. I use a lot of energy too. And the core inflation is X food and energy. So X food and energy, still we can see a decrease up that they're forecasted. This doesn't mean that they're right. They can be completely wrong. If they're wrong, this thing comes out at like 7 or 6, the dollar is going to scream to the north side and everyone's going to be whacked, right? because it's not expected. Anything that's outside what's expected is going to create a bigger bang, a bigger ripple in the market, right? If it's in line, if it comes at 5.4, comes in at 5.4, you might see a little bit of a bump, right? But if this is extreme negative or extreme positive, like plus or minus 0.5, let's say this comes in at 4.3, we would see a major rally across the board in stocks, equities, everything will just scream to new highs when we have a number that's outside what the forecasts are calling for. Okay. Now if it comes in at 7, then the dollar is just going screaming higher, and we're going into some type of recession free fall, right? That's just my opinion, just my 2 pips. Okay. Inflation rate month on month, comparing it in previous month was 0.4%. Forecast call for 0.3%. Now, in fact, the inflation rate is a lot lower than people think, because actually, if you factor out like May of 2022, when we had the supply chain disruption, all that was a big spike, and that was figured out into the average. And now we have like, oh my God, we're 7% inflation, blah, blah, blah. But it was an outside number. If you take that month out and still compare it and take the other 12 months, take the other 11 months, then we're at like 3.9%. Okay. So it's like that 1 month threw everything off, that made us look like we had super high inflation, which gave cover for the Fed to hike rates, right? And it's remarkable how the banks can't give anyone else any more interest on their accounts, while the Fed funds rate has gone up. So it's like maybe they're helping the banks pad themselves to get some extra money by the spread between the rate that the banks borrow from the Fed and the rate that they actually extend credit to the consumer. Well, they're keeping a big chunk of money, right? And so that's keeping them afloat. And so, but we're not seeing great profitability in the banks. The bank stocks they're basically doing nothing. And usually in a high interest rate environment or a hiking rate environment, in fact, my very, very first option trade back in 1996 in a Wade Cook seminar years ago was I bought the bank in New York. Why? The Fed had hiked rates. And I got on my Motorola flip phone. I flipped the phone and I called my broker and I said, buy me, let me have the 35 or $40 calls or something at 5.25 or something like that. And I made like $500 right there in the seminar. Okay, that's why I do live trading, because I learned live trading from doing that in the 90s on a phone, right? So because and the reason why we got into the trade is because they're hiking interest rates, and when interest rates are going higher, banks can make more money, right? And the bank stocks are going up. But in this cycle, we have not seen bank stocks really go up. And that's kind of like, oh, what's going on here? You got rates are higher and you're making more money, but you're not showing profitability. Maybe you're hiding something that maybe your balance sheet is negative. Maybe you're underwater somewhere. Maybe, this is something that I shouldn't be talking about right now, right? Anyway, moving right along, we have UK GDP coming up on Wednesday at 2 a.m. Eastern time. I mean, if you're up, and it looks like the GDP has actually increased from negative 0.3% to 0.3%. And that would be positive for the British pound. British pound, another name for the British pound US dollar exchange rate is called cable. And why? Is because they had the transatlantic cable that was connecting England and Newfoundland, or the North American continent. And that's how that was like in the 1890s or so. And so they could transfer information. And that's why we have wire transfer, right? Because we can transfer money via electronics. Now, and when the euro came out, well, guess what? It's more modern than the pound. Pound's been around for 900 years, right? In fact, I think I have a pound coin. I think I have a couple of pound coins lying right here, right? I just happen to keep pounds lying around, right? That's a pound coin. Isn't their money pretty? That's a 1 pounder, right? Woohoo! That's like what, 1.25 to the dollar, right? Nice. So yeah. So when the euro came out in 1999, they say, well, what's our nickname? Well, they call it fiber. Fiber because it's fiber optic, the fiber optic cable, fiber, the UK is old school, so it's cable with the copper wires, and the euro is fiber with the glass fiber. It's not fiber like in your cereal where you eat too much fiber and then you gotta go to the bathroom. That's completely different, right? But that's a nickname for so we'll fiber, cable, right? And there's a lot of interesting currency names like the US dollar versus the Russian ruble is called the Barney Rubble, right? So if you're a Flintstone fan, that's look that up. You check, Greg, you're making stuff up now, right? It's like, no, okay, moving right along, right? So we're educational here too. USD, dollar, got flags going 8:30 a.m. Eastern time on Wednesday. We have PPI, which stands for Producer Price Index. Anytime we see the I, forget about index, it means inflation, month on month. This is not your mom, M-O-M is month on month. So they're comparing the previous month to the month before that one, right? So they're going to compare April with May, and the number is supposed to be unchanged, 0.2, right? So if we come in lower than 0.2, that's going to be very negative for the US dollar and positive for all the risk on assets, the risk on currencies like the Australian dollar, pound dollar, Kiwi dollar, Canadian dollar, right? Then we have the FOMC economic projections. We don't have any numbers for that. It's just a speech, but that's at 2 p.m. And then with the Fed interest rate decision, an interest rate decision for June, right? And they're widely expected to keep rates unchanged at 5.25%. And what they're talking about is either a skip or a pause, okay? So if they keep it unchanged at 5.25, this is a pause, right? And so they might, at the next Fed meeting, they may say they might pause here and hike in the next meeting, right? But they could surprise us with a hike of 0.25%, another 25 basis points, to make it at 5.5%, just as an insurance to make sure that inflation's ugly head is smashed down. Now, with the unemployment number that came out last week, 261,000 people were unemployed. Well, that was that basically let the Fed know that, wow, we are hiking interest rates are taking away jobs. It's working. So, okay. Remember, they have a dual mandate of full employment and price stability, but price stability is greater than employment, as you've figured out. And there's a press conference after that. So you may see markets actually move sideways and just move in a sideways, choppy channel going into this meeting. In fact, if you get up at 2 a.m. or 4 a.m. to try to trade this market, you're probably going to, it might be like watching grass peel and paint grow, which both those things never can happen. And that's what's probably going to happen with the market, because people are waiting for this FOMC economic, this rate decision to come out. And it's such a big interest rate, central bank rate announcements, rate decisions are the most powerful announcement in the currency market, in the stock market too. Stock markets are watching this too, right? I mean, this number comes at 8:30 or 2 p.m. And so the market, you're in the market, like, do I really want to be in the market when Jerome Powell gets on the microphone? This is like the crop report in Trading Places with Clarence Beeks. Well, I'm not Clarence Beeks, but we're going to look at some charts and get some insight of where this market could go. If they pause, you look for the markets to totally skyrocket. If they hike rates, then we could see the markets actually drop, right? Stock markets, I'm talking about, and risk on. I want to talk about markets. Like, what do you mean by that? Do I mean dollar CAD? Like, no, dollar CAD will probably rally if we hike. However, if we pause, or if we're not going to cut, the only choices are pausing, right? Which means we're skipping a hike this time, and we may hike in July, right? So we may, so that could happen here. So our sell and may go away philosophy is getting screwed right now, because the S&P was up, for it finished down for May, but it's up right now in June. So again, it's widely expected for them to keep rates unchanged at 5.25%. If they surprise hike, if they do hike, it is a surprise. If the Fed is saying that they're data dependent, they're watching the data. The data is right now coming out showing that inflation is on a downtrend and job growth is going down, which is less people buying stuff. And if people don't have jobs and they don't have any money to buy stuff, then price of stuff goes down. Okay. No one on Bloomberg or CNBC is going to explain it to you like that. Let me know what you think about that in the chat box, in the comment section. Let me know what you think about that. Especially like if you have a job and then your job announces, well, I'm sorry, George, thanks for working for 30 years. You're laid off. Why? Because the cost of borrowing money is expensive and growth is slow. So we got to cut you. And you're doing your patriotic duty because you lost your job, because you're not going to buy anything. And that's going to lower inflation for everybody else who is working. Okay, what kind of crap is that, right? So I suggest that you learn how to trade so you're not dependent on the corporate, whatever they want to do. They just want to like do whatever they want to do, and you're a victim. So don't be a victim. Be proactive. Learn how to trade. Okay, and you don't even use me. Find someone else, but learn how to trade. Unplug from the system. All right. So we got the Fed press conference is going to come on. So we'll have an hour after about 2 p.m. and they're going to have, the press conference. And about an hour, this thing is going to be spiking up and down, whether you're trading the euro, this is the currency we're going to be looking at. And then, and that's going to be, pretty much it for U.S. news. And then later on, we're going to have Japanese trade balance. I kind of ignore Japanese news because Japan is, I've talked about this before. I'm probably going to have another webinar on maybe how to trade the Japanese yen, right? Because the Japanese yen is like, people have been, well, the Japanese yen has to increase in value. No, they depend on a weak currency in order to sell Lexuses and Sony PlayStations and all the cool electronic stuff that comes out of Japan. By keeping a low yen, it makes their products much more cheaper. In fact, I remember talking to Kevin St. Louis, who's a friend of mine, who's a car dealer, and he says that the Japanese yen devaluation that they have is equivalent to like a $5,000 credit on a car. So that makes American cars at disadvantage because the Japanese have built in the credit savings into their currency. That's why you don't see, hey, get $5,500 cash back and blah, 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 blah. You don't get those kind of financing things on your Camrys and your RAV4s and your Nissan trucks and stuff like that. Why? Because it's built in to the currency exchange. And so having a low currency is advantageous to the Bank of Japan, for the economy. And if the Japanese yen were to increase in value, it would destroy their export dependent economy. Okay. And they're not currency manipulators because we designed the system for them. We create after World War II, after we bombed them, and we created an economic system, system where they didn't have to have an army, and we wrote their constitution. And we changed their fiscal year. So this was a complete American design. So don't complain about it. We did it, and they just exploited it. And so did China. China just said, well, if you're going to do that, I think we're going to do the same thing. And that's why they're very powerful exporters. Okay. Now we have Chinese industrial production at 10 p.m. And you would say, well, Greg, why are we looking at the Chinese data? Well, we don't trade the Chinese renminbi or the yuan, but we do trade currencies which have big trading partnerships with. We have Australia and New Zealand. In fact, New Zealand has more sheep than people. They export. They're called the breadbasket of Asia. Breadbasket of Asia means they supply milk, food, meat to almost 2 billion people, right? So their destinies are intertwined very closely. And Australia supplies copper, iron ore, and raw materials for manufacturing in China. So when the Chinese economy catches a cold, well, guess what? Well, Australia and New Zealand gets COVID, right? And if China is doing great, then Australia and New Zealand are actually they're doing well too, right? So, but you look at this number, and what we see after the COVID, the unlocking of China after their COVID, the reopening, that their economy is not rebounding as strongly as anticipated. And so we see their industrial production, 5.6%, is going to drop to 4.1%. This is something that's never, ever happened in decades. China's always been, 12% or some double-digit crazy number. And it's due to because domestic demand, they try to focus on domestic demand. We also have pressure on the U.S. and other countries, pulling out chip production and a number of things which are undermining Chinese growth, and also large youth unemployment, and a lot of companies around the world just shifting production away from China because of their government policies and record on human rights. So okay, so that's what we're seeing. So we could see weakness in the Australian dollar, especially after maybe it rose, right? So this may be a profit-taking opportunity for people who are trading Australian dollar, and we can see it sink. So when we see the Chinese flag, we want to think about trading the Australian dollar and also checking out what's going on in New Zealand dollar, right? Because news is the wind in the sails of these little boats called currencies, right? When the economic winds blow, these currencies move. And if you don't know what type of wind is blowing, you may be in the wrong sailboat, okay? Now, here we go. We got their ECB flag. So it's the blue with the stars around that. And with the ECB rate decision, guys, another central bank rate decision. I told you these rate decisions are extremely powerful and can really move the currencies. And it's widely expected from the raise rates 25 basis points from 3.75% to 4%. And that could cause the euro to rise dramatically. Their deposit facility rate supposed to also rise from 3.25% to 3.5%. You figure they were zero not too long ago, and they're hiking rates, and they may be behind the curve. They're seeing huge amounts of inflation in Italy and countries. They're seeing like 7, 8 in Portugal, high inflation. So the ECB has to do something. And they might, if they do something dramatic, like raising it to 4.5% or 5%, then we could see the euro really become a hero here, right? So that is 8:15 a.m. They usually have, they used to have a press conference afterwards. I don't see that. But 8:30 a.m., we're back into the cycle again. U.S. news cycle at 8:30 a.m. Retail sales month on month. It's supposed to rise from 0.4% to 0.5%. Now, retail sales, an increase in retail sales, 80% of GDP of the U.S. is based on consumers buying stuff, right? And that would support other currencies as well, because other countries export to us, we buy from them. Their currencies go up as we exchange our dollars for their stuff. Our dollars become weaker, right? So the whole world is looking at these numbers, like, well, why would they look at the U.S.? It's like, yeah, because the U.S. is the #1 economy in the world, and we buy stuff from everybody. So everyone's going to be looking at our economic numbers. And then we have there's the ECB press conference. I'm like, usually we have a press conference, 8:45 a.m., and the euro could respond as they give reasons why they're hiking the rates, or if they give inclination that they'll hike at the next meeting, or maybe they're one and done. But you'll find that out at the press conference. But with the BOJ, the Bank of Japan, it's like, and it's no surprise, they have negative interest rates. They call it a ZIRP, ZIRP, or zero interest rate policy, the ZIRP policy. And it's negative 0.1. They have the lowest interest rates ever on the planet, right? I don't think any other country, maybe Switzerland had these low interest rates too, 0.1%. Now you can see, if you are a Japanese citizen and this is your rate of return, what are you going to do? You're going to buy US stocks. You're going to buy Japanese stocks. You're going to buy higher yielding currencies. All you got to do is exchange my yen for Aussie dollar, and I'm going to get a a 4% bump, right? Or I can exchange my Japanese yen for euros, and I can get a higher interest rate as well. I can get 4% versus negative 0.1%. So you can see money will flow in this direction. And that's what keeps the yen low. Just looking at this, we call this the carry trade, where people just buy, they'll go long euro yen, right? That means you're selling yen to buy euros. Why? Because they're going to give you 4.1% for owning, or 4% for owning the euro, and you got to pay. I don't know what's going on here. How do you get negative 0? Do they pay you to borrow money from them? I'm not sure how that actually works, but I think it works out. If you buy their bonds, you're guaranteed to lose money because of the return. Okay. Friday, we end everything with the University of Michigan Consumer Sentiment. Go Wolverines. And 59.2, my aunt and uncle, they live in Michigan. Hi, auntie. Hi, uncle. How you doing? 59.2 to 60.8. And so consumers are getting, as more people lose their jobs and prices fall, the people who do have jobs are happier, right? I mean, if you poll the people that lost their jobs, their incentive is probably not that good, right? but they poll the people who have jobs, and of course they're going to be happy, right? So that is it. This was an extended link because we had 3 central bank announcements. We have the Fed, we have the Japan, and we also have the ECB, right? And again, for the Bank of Japan, the decision, are they ever going to hike? Never. Okay, they will never, ever, 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 ever raise rates. All right. All right. I hope did I say never, ever, ever? Okay. Let me say that again. Okay. Ever. Hey, I think you don't do it. Do not sell. Do not buy yen. I see all these videos on YouTube. Yeah, it's on all-time low. Yeah, it could go lower too, right? And we used to have our monitors in the brokerage. We had Dell monitors, and price would go down to the border where it says Dell. And I would say, price can go beyond Dell. Just because it's at the bottom of your monitor doesn't mean that prices can't go lower, okay? They could blow a hole through your monitor and go down through your desk and down to the floor, right? It was just a joke, okay? You can picture that. We're going to start with the U.S. dollar index. The U.S. dollar index, the DXY is the ticker symbol, and it is a basket of currencies versus the U.S. dollar, where I always start with a 50,000-foot view, the zooming out view over years. This is back to year 2000, 2000, parties over, out of sight, because it's 1999. Okay. And then so we got a drop. We hit all-time lows, and we bottomed out. The financial crisis, Brexit, and then we took off and been taking off ever since, right? So we have higher highs and higher lows. So we have, market structure. Gotta put that British accent in. Market structure, higher highs and higher lows. All right. So we have an uptrend. Okay. We have an uptrend, but we also have kind of a harami, kind of a bearish pattern, but we've been locked in a range. If you really look at it closely, we're locked in a range for the past 4 months. We haven't gone anywhere. After this big run up and this big run down, it's like, where do we go from here? And right? And we have a uptrend, higher highs and higher lows. We're above the 200 simple moving average. We have speed line where price actually, made some more highs. And so, as long as we haven't broken this trend line, we can see maybe a price come back down for a month and maybe come back and test this trend line and give us another tag of the line for a push higher, right? Especially if we start getting a pause or something like that. And then typically July through September, October, the dollar usually kicks serious butt, right? We see the dollar usually rise. So let's drop down to a weekly chart, and we can see sideways channel. Well, we have lower high, We don't have a lower low. We have the same low. It was a double bottom. Looked like we're getting to the top of the box and we're not. We have an evening star pattern that's forming. And so we could see price continue down to the trend line, right? So I'm short-term bearish the dollar, short-term, right? But longer term, I am bullish the dollar. I think we go back up, right? But this is a weekly chart, and I know you guys like say, Greg, you're a scalper. You're not even gonna look at the weekly chart. You're like, you darn straight, I'm not. But I do. I'm actually going to. Now you can see. I mean, we've got a bullish harami here, and we've got a little bit of a push down. So we might get maybe a little bit of a push down. Make go down to right here. We have a big push and a pullback, and we've tried once. We tried the second time. This is like an ABC correction, so we might see a rally in this, a little pump and dump. Let's go down to a 4-hour chart. Or really, a Fed decision. Here we go. So there we go. We got our ABC correction, and maybe we come back into this congestion. We have like an up and down zone where we actually will. We don't break. We have to break. We have to break support. But we might get some type of a rally, on Monday, pump up the volume, and then after the Fed comes out and they pause, then we can see a breakdown, right? But right now we're still in we do have this higher move higher, but lower highs and lower lows, ABC. It's we're still in this kind of like congestion, and so I mean, what I would do is like, look, okay, can we break above 104.70? That would be a resistance. We can play the range, buy at support, sell at resistance. We've got resistance there, and we've got some some old highs and lows here, right? So we've got those lines where we had sideways always break, bounce, sideways break, so we can come back and test short-term test 103.89. Okay, now I know we don't say, well, Greg, I don't even trade the DXY, but what we can do is trade the anti-dollar and go to EUR/USD, which goes in the opposite direction, because why? The US dollar index is made up of a lot of European currencies, right? So here we go. This is our monthly chart, and you can see that we have made lower highs and lower lows. We found some support, this old stick, kind of a stick sandwich back here. Like they made all those zigzags back here in 2002, projected that right there, and there's your demand zone that you want to talk about there. But then we have an uptrend, higher lows, right? We broke that line, right? And now we're testing the back side of the line. So I'm thinking that we broke this support line, and we came back and tested this trend line, and we could see maybe a push lower, right? But I don't think it's going to be that low. I think after the ECB rate announcement, we'll have something like this, where price actually comes down a little bit, and then comes to Fibonacci support, and then a break higher, right? I think we could take a fib from this low to this high and look maybe for are we sitting on the 38, or we're sitting on the 23? So I think we get the 38 comes in at 107.48. No, I'm sorry, 104.81, 104.83. Okay, so we got maybe get sometime a little bounce there. Maybe the 50% retracement, 50% comes in. Let me just put a line there. That makes it easier to read. But we're going to have some type of Fibonacci relationship here. Yeah, 102. Woohoo! I don't think we're going to get that low. Right there right here. Yeah, 104.61. That'd be the 38% retracement. And then that will give us a nice little bounce from this demand zone here, and then we would see a pop up. So I think we get push downs on Monday, Tuesday, and then the news comes out, we'll be on and up and flying there. Okay, that's the monthly, weekly. There we go. Okay, yep, there we go. So there's the support, bunch of taps at the 38% retracement, and you go, well, remember we draw fibs from the low to the high. How did we get support here already when the fibs haven't even been established yet? And that's why this stuff's all rigged, right? You didn't hear that from me. I'll edit that out. Okay. So we're sitting on some we're on some type of dinky support there. I would draw a trend line on that too. I'd say, look, you break the support line here, then I'm looking to take this down. We could get, I mean, we've got this bearish Harami kind of pattern right here. So bulls versus bears. I'm short-term bullish, medium-term bearish. Well, no, yeah, sure, no. Let me put this way: short-term bearish, medium-term bullish, long-term bearish. Okay, so I know it's kind of confusing, but we're in a zone here between central bank announcements and the summertime. These guys they really want to go home for the holidays, and they want to lock all this stuff up in the US dollar, kick back, go to the Hamptons in New York or the French Riviera and kick it back until October 31st and come back. And right now, there's a lot of activity here going on. You got central banks, the inflation rate, you have we just got over the debt ceiling thing. So there's a lot of stuff like, well, I can go on vacation later. I'm trying to make some money, right? That's what people are saying. But, once this Fed announcement clears out, we'll probably see a rally and then the dollar resumption. But right now, it's looks like a short term, some profit taking on this deal, and maybe a bounce. So about come down to about the maybe a 105, 200 moving averages right in there too. And so usually that acts as a magnet for price. Okay. And so this is probably going to be the same scenario for, let's go to the British pound. We're going to have British pound data too, but I want to go to the Aussie because that's going to be the big one that we're going to be looking at. The first thing we're going to be looking at. All right. I'm going to start off that monthly chart again. And you can see that we took off on the bad news, right? People losing their jobs and everything goes up. Yay, thank you, George, for being on unemployment. So the prices go down so we can have a higher stock market. Right, okay. Reminds me of that Star Trek episode where they had the digital war, but they ain't really shooting anything. They just had numbers and people had to report to the special room to be neutralized. Oh, the city was destroyed, 10,000 people died. Everyone report to the destruction chamber. It's like, oh, I don't think so. And that's science fiction stuff. That'll never, ever happen in real life. It's like, oh, snap. They're going to reduce jobs in order to lower inflation. Okay. All right. Anyway, I'm digressing again. Monthly chart. Again, we've been sideways for a while. And we look at some highs here, the 81 area. And guys, this is why I like, the Forex market is $6.1 trillion. It's the largest, most liquid market in the world. And I know you guys got some crypto fanboys out there, but the federal government is gunning for crypto. This Gessner guy, he's oh my God, if you're a crypto guy, this guy is like public enemy number one. He's suing all the brokerages and the exchanges. I just checked out of crypto, guys. I had Tron and I had some ADA and I had Cardano. It's like, I know about most of my coins, bread, they just disappeared. I had these coins and Syndicator or whatever, it was ARG. They had these great stories, these great usage cases, and then they just disappear. And I guess got tired of putting money in a wallet and having it go from 0.01 to 0.0000001, right? It's worse than a reverse stock split. I said, well, you know what? This stuff's been around for like a couple hundred years, largest, most liquid market in the world. I'm tired of seeing my crypto wallets go negative. And I just went Forex. I said, you know what? It was a good idea. Crypto's a good idea. But unless there's some type of fundamental change, I'm just trading the US dollar, baby. People say the dollar is dying, we have all the nuclear weapons, we have all the warships, we have control of all of the largest, most powerful military. We have the Fed, who's the most powerful organization. They can print as much money as they want. They're not about to give up power to some digital blockchain network. Are you kidding? Massive control. The US dollar is control. It's our number one product. And yeah, he's gotta love it. Play the game. The game is the dollar. So if you've got all kinds of money stuffed away in all these other currencies, guys, they're going to be worthless. They're going to be worthless. It's unfortunate, the decentralized currencies and currencies that have borders and all this other stuff sounds really good. But if you've got a bunch of people who are just not going to let it happen, don't fight the Fed. Okay. And that's a saying that goes way back before crypto. It goes back to the 70s and 60s. Don't fight the Fed. When the Fed starts hiking rates or cutting rates, then you don't fight the Fed, right? Now, if the Fed starts cutting rates, then the crypto might have a chance. But legally, it's just becoming harder and harder to hold on to those crypto assets. So my thing is, guys, if you just go get all invested in the currencies or even the stocks, and I have to start to defer to stocks and commodities, it's a game that's being played by really big shots, and you really don't want to lose your compounding. If you're young, they say most millennials have their money in crypto, and you really don't want to lose your compounding years holding on to crypto when you can really just put some money into trading currencies and just generate alpha quickly and stack that and buy NVIDIA and Microsoft. Not giving you trade recommendations, but if you look at those are being around for years and years and years, right? They're not some project that some guy figured out. And the project could be very good, very good use case. But if they're not going to allow that case to they're going to treat it like a security and sue it. You're outnumbered, you're outgunned, right? Anyway, Aussie dollar, here we go. Higher highs or higher lows. We have lower highs and higher lows. That forms a triangle. That's another good lesson on triangles. Triangles represent indecision in the market. But we can see that, we can see a breakout from the triangle. We have overhead supply and demand. Supply and demand, when they meet, create a triangle. And the breakout, that means that there's more demand than supply, and that creates this buying frenzy, right? And we see almost a bullish engulfing candle on a monthly chart here. That's pretty, we can see some continuation from that. That's like rocket force, fire those rockets that break out of the gravity pull of the bears. We go to a weekly chart and you can see we have like a morning star pattern breaking out to the north side, and daily chart, bulls versus bears. I am bullish the Australian dollar. You want to, buy on weakness, look for some type of a pullback or weakness. Right now, it's like straight up. I mean, this is a daily chart, day after day after day. We have 1 day bearish and all days bullish. You could just bought it. You bought it 65.05. Let's call it 6,500, and you're at 67. That's a 200 pip move just by sitting on it, and you've got probably positive carry as well. If you traded Aussie yen with a negative interest rate on one side, a positive interest rate on the other side, you get paid daily interest on currency swaps, okay? Oh, that's another thing we're gonna talk about, the carry trade and interest. Okay, I'm thinking of like topics. So you guys aren't telling me any topics. But you can get, if you ever see a swap, it's been negative because interest rates have been like zero or negative for years. And we finally have some positive interest So if you're like long Aussie yen, you're going to get a 4%, this 4 versus negative 0.1 from the Japan, you're going to get a 3.9% currency interest yield. And that's daily, triple on Wednesdays, triple interest on Wednesday. I'll go over that in our webinar. I don't have a lot of time there. I'm just really trying to give you as much information as possible to help you make great trading decisions. And sometimes it's like drinking from a water hose, like, oh, I can't breathe. It's just too much information. Too much information. Put it through my brain. Too much information. Driving me insane. Stop. Okay. All right. Let's go to 4-hour chart. Higher highs and higher. Look at this. It's come on stupid easy. Look, buy the dip, sell, buy the dip, sell, buy the dip, sell. Like, really? Is that easy? Yeah. Again, this is something I would do or I have done. In fact, I did a trade. I did, trades where I did over 1,351% or something like that. In 4 days, I cashed out of that, right? My Giazzo. This is my own internal website. It's going to load and load and load. Meanwhile, I'll go back to the chart while it's loading. Right. So I am bullish Aussie dollar, medium term, longer term. I'm bearish actually. I think we could get up to about 60 in this upper trend line, 68.40, maybe we can see 69. So I'm bullish Aussie dollar. Okay. Now you might get an entry on Monday because usually we get a pullback on Monday. So if we get a pullback, I want to see a pullback and buy on. You don't want to get FOMO buying at the top. You want to see some weakness, come in on the weakness and look for it. That's what I would do. I personally would just look for some weakness and buy cheap, buy low, sell high. Okay. And then we have Chinese data coming out too. So again, it may and here is look, if you look at what's going on here, I just killed this to the upside and took it to the downside. It was, yeah, that's all I traded for that trade. Let me see if it's up. Yeah, I think it was all, yeah, it was all New Zealand dollar all the time. It was like the gift that kept on giving. I mean, look at this. New Zealand, sell, 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 sell. I just hit it. Took $242.57 to $3,278.15 in 4 days. Just hit it. 86% win rate. And you see any losses? You see any losses? You see any losses? You see any losses? Oh, there's 1. There's 2. There's 3. There's 4. There's 5. Okay, 5 losses. 86% win rate for $3,520. It'd be cool to put $200 in the account, make $3,000. You do that a week, $3,000. That's $117,000 a year. You're making 6 figures already, right? That's what we talk about. 4 figures to 6 figures. 4 pillars of 6 figures is our video, right? That's how we do it. Hello. This is how we do it, baby. This is how, anyway. All right. So here we go. New Zealand dollar. And higher highs, higher lows. See that night we're topping right there. We're topping at a Fibonacci area of resistance. Look for a pullback to get us in. We got close to the 50, almost close, like hand grenades and horseshoes. But we want to see a little bit of a pullback. Look for a pullback. And then on bulls versus bears, I am short-term bearish, like short. Who wears shorts? And then I'm looking for the scream to the upside. Look, you got inverted head and shoulders pattern. This thing is like, come on now, buy me. You sold me, buy me. All right, you got the shoulder, you got head, you got another shoulder. Boom, right? Boom, boom, boom. Break. We broke out above the neckline. And you take a measurement objective and you can project how far this could go. And I'm not going to hold it to the projection. I'm going to take multiple trades over and over again in a certain area. And then, I might milk, 100, 200 pips out of like a move from here to here. Because I'll drop down to a smaller time frame and I'll like Ant-Man on that thing and go boom, 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 boom. Right. And they'll shrink real small, get down to the 1 minute chart and just start taking money there. And then maybe go here or go down to 5 second chart. Right. We can talk about that too. If you want that as a topic, let me know. Email me, greg@elitetradersu.com, if you are interested in what you want me to talk about. I don't know why I even did this. I just lost them. Senior moment. Anyway, oh, there you go. Duplicate. That was good. I'm like going clone like a sheep. That's how I remember it. Clone like a sheep. Projection target. Oh, it takes it to the 61.8 retracement. So it takes us up to, let's say we got a hypothetical trade. This is for hypothetical trades only, for entertainment purposes, not a trade recommendation. Yeah, it's totally hypothetical, right? Yep. But you see that big candle there is telling me that this is where it started, and usually go back to source. Oh, return back to source. Boom. And that would be a cool 5.1 to 1 risk reward all day long. Take that. But I would take so many trades in between these because it doesn't move in a straight line. But anyway, that's what you learn mentorship. And if you want to find more about mentorship, you can go to the Elite Traders University website, elitetradersuniversity.com. Come to my website. Come to my website. There is an income boost blueprint ebook. There's also a free masterclass that will drop down and pop up and irritate you. Why is this pop up in my way? Click it to watch it now. Register to watch it. Watch me actually put a trade on. There's the ebook there. Put your name and email address. We won't spam you. I probably will forget you're on my email list and forget to email you. So, and that may be a good thing. You got enough junk in your email box, right? Why do you want my stuff? Oh, because my stuff makes you money, maybe? I don't know. I'm not interested in making money. It's okay, Greg. I like living a humble life. Money isn't everything. Okay. Don't believe it. Don't believe it. Okay. I don't need video editing. I am my own video editing. Okay. I don't need special effects either. I am my own special effects. Okay. All right. I hope that woke you up. I'm like, what is up with Greg? And how much coffee did he have? Yeah, I made my own homemade espresso with 2 teaspoons of instant coffee with hot water, with 2 ounces of hot water. It's the only way to fly, baby. Okay, moving right along. It's dollar yen, USD JPY. Remember, Japanese are, even when the dollar may drop, don't stop till you drop. Let me remove all the drawings out here. Don't stop. All right, we got first thing you should look at is look for support. You see, double bottom right there, boom, boom, right? And then you have a rising trend line, higher highs and higher lows. Okay, so that's and we're on a monthly. Okay, no, we are on a 4-hour. I'm skipping steps, right? And you're probably saying, "Good, Greg," because the monthly charts. Look at this monthly though. There you go. Look, bounce to support, bounce right to Fibonacci support. I mean, like you don't even need Fibonacci lines to see that one. It's like, no, I don't even need the lines, man. I can see it. Yeah, you can see dead people too, right? There we go. Right down to the 50% retracement, bounce, looking for a move toward the old high 151 and beyond, right? Why? Japan has negative interest rates. We have 5%. 5.25% or -1. Which one should I choose? Not sure. I don't know. Let me call a friend. Can I get a lifeline, please? Can I buy a vowel? B. Wrong. Okay. This is why it's going up. And this is why it's not going down. Look at all the videos of the yen is going to get super strong because it's on all-time lows. Okay, anyway, moving right along. I'm not making fun of anybody. There we go. That's higher, look, higher, we have a high, a higher low, a higher high, get a higher low. We're stair-stepping, following this trend line, which we can connect down here. And we're just in an uptrend, right? Higher highs and higher lows, uptrend. We are buying on the dips and looking for, that's what I would do, not telling you what to do. You can do what you want to do. In fact, help me out and sell the thing so I can buy it from you cheaper, right? Remember, losers pay winners, right? And 90% of all traders lose. And if you're listening to people on the web, well, they're part of the 90%. because the 10% aren't going to talk to you for nothing, except for me. So anyway, I'm just kidding. No, I'm not. Yes, I'm trying. I actually had one. Had one of my own students go into a chat room. Oh, I lost money. Go, why? Can I listen to this guy about that? Why? Because everyone else in there was doing it. Did you all lose money together? Yeah. Did you feel good? No. Well, then that's why you use my system that's proprietary. You sign an NDA. It's not on the web. So once you think anything's on the web is going to help you, probably not, right? I mean, there's good general stuff. Don't get me wrong. Okay. What's a pip? What's support? What's resistance? What are candles? That's really helpful stuff. Okay. But now once you have all the ingredients, you can't make a cake because you don't have a recipe. And that's where I come in. I give you the recipe to print money, the license to print money. All right. Right. You know how to drive a car, but can you drive the Indianapolis Speedway? No. Right. I'm your guide for that. Okay. Just because you learn the basics of trading doesn't mean you can make money trading. You just have a very general, you're a generalist. You have a general understanding of how the markets work, but you probably can't squeeze a dollar out of it if your life depended on it. And that's okay. That's where I come in. I solve that problem. I'm a trader problem solver. If you have a problem with your trading, I can solve it because I've been doing this for a really long time, probably longer than you've been alive, which is pretty interesting, huh? Okay. I know I don't look at it. It's the oil of Olay and it's AI. No. It doesn't crack, right? Anyway, moving right along. Can we even move from here after that comment? Greg, your sponsorship's been pulled. I'm not sponsored by it. I don't need anybody to sponsor me, right? Do I need a sponsor? No. Anyway. All right, so that's a 4-hour chart there. And we have a double bottom. If we hold this area 38.73, then we look to go much higher. We look for a retest of the high, okay? And we get back on track here, right? And then so we're looking at, especially the Bank of Japan keeps rates unchanged. And this is like, come on now. Now, don't get me wrong. We get big dips, right? You get these dips, but they get followed back by huge buying, right? So these big dips provide huge buying opportunities, but it doesn't mean that the fundamentals have changed, right? People say, oh, look, see, it's working. See, the yen is getting stronger. It's like, It's like, no, they just resetting. Okay. 4 hours are dealer charts. We're hitting support. You can play the range, I'm buying the low, selling the high. I'm looking on bulls versus bears. I am bullish forever on the dollar yen. Okay. So that's in the story. What's buy? What tomorrow? Buy. Next year? Buy. But Greg, that doesn't seem correct. It's like, oh yeah? Well, go back. All right. S&P 500. You guys want to see that? Cool. I'm gonna use a CFD because looking for futures is kind of hard here. And usually I can use like Pepperstone or something. And we can see we broke out. We did not come to the trend line, but we did break and get higher highs and higher lows, right? So we did not do that, but we did get higher here, right? And that was my choice. If we broke the low and held it, but we didn't, and I need to go back up to the monthly chart, right? Just go to the monthly, start, right? I'm not just going to move all the trend lines and stuff, all the drawings on the S&P 500. I hope you guys are enjoying this, but look at that. That is like, come on now. Oh, like OMG, right? Breakout. Dun, 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 dun. Swing out, sister, baby. Look at it. It swung out, all right. Ooh. Bounce. Ooh, at the 50%. Higher highs and higher lows, bro. And, we can see 48.11. I made a nice double top there. Lots of room to run. The tech-heavy NASDAQ is probably doing something similar. Bulls versus bears. I am bullish. Be very interesting though. We might not get there. I think they might sucker people into it's going to go to the old high, and then we do some type of a three-wave correction. A, B, and see you later, right? Well, see you later might be our rate hike in July, right? And then we move sideways until October. Then we blow through this sucker and we get like 5,400 or something. But yeah. So that's because everyone's crying wolf. Anytime everyone, there's a recession coming, recession coming. No. When everyone says it, it means it's the opposite. Because you have to have people on the other side of the trade, right? If everyone's selling, there's no one left to buy, then any buying just sends price higher. That's just economics 101. What do you mean by that? Join mentorship, you can figure that out, bro. I can't answer all these questions. Okay. Thank you for your question. All right. There we go. Bulls versus bears. I am bullish. We got a gap here to be filled, 44.95. And then the 4,600 area. I think we have some more to run, especially if the Fed pauses. It's lights out. This is party city, right? And they're already saying it. They can't even hold themselves. They're like, Jerome Powell's like shaking his head. Oh, like, yeah. Pause and a skip. We skip 100% expansion at 44.28. And look, the 1.27 exactly on my red line. Look at that. 45.98.35, right? That's my prediction. All right. Take it or leave it. Again, not a recommendation. Is just what I see. That might happen. This is my opinion. Just my 2 pips, right? And BTC, BTC USD. BTC USD. We got a lot of negative stuff going on for our Bitcoin. Even now this is really interesting because we have a risk on market, and the Bitcoin is not doing anything here. Well, there's the month chart, and I said we're coming down. We hit some Fibonacci resistance, and the Fed is just holding this thing down. Just like Citibank manipulated the entire gold market for 11 years. They got fined like $900 million for manipulating gold. One company, one bank, one bitty bank was able to control the entire gold market for 11 years. One company, JP Morgan Chase, fined $900 million for controlling and manipulating the gold market. If one bank can manipulate the gold market, which is in the billions, how much do you think the Federal Reserve, with unlimited firepower and unlimited resources that can print money at will, can control the crypto market to wear out would-be hodlers until they're ground out of the market, right? So they buy at support, sell at resistance, buy at support. And so, that's just a theory. Don't quote me on it. But it's perfect for trade. If you're trading, this thing drops down into this 15,000 area again, you buy the crap out of it. And then when if it hits like 30,000, it's coming down, right? So they've got it locked into this range, right? And they've got control. Now, if they miscalculate, and this thing does something like a Bed Bath and Beyond or a GameStop, where they've controlled those stocks, the meme stocks. The meme stocks are meme stocks because they were manipulated in a range. They buy at support. It was something called rolling stock back in the day with Wade Cook. And what happened was they all started selling, and then some guy, maybe by the name of Elon Musk, might have gone on Reddit and said, look, these guys are selling. You gotta buy. If we get enough people buying, we'll hit their stops and cause them to buy their trades and cause a short squeeze rally. Now, if something happened like that, where the Fed somehow miscalculates, they get comfortable, and some guy comes in and starts buying the crap out of Bitcoin, then we can see a short squeeze rally of epic proportions, right? And if they use the Fed rate pause to move Bitcoin higher, then that's like an outside event that could cause Bitcoin. You know why I'm thinking that? Because the way it's falling in a very tight range. Is not like rolling over and just dying like these other drops, but there's lots of fight going on here. So I'm just wondering that, will somehow something comes in and hits this thing, because if the Fed is only anticipating, well, so many orders come in, and if 10,000 orders come in, we sell 10,000, then we just block it, right? But what if somebody comes in with 20,000 when they expect 10 and blow them out, and then other people see the breakout and all the algos kick in, and the Fed is off balance, right? Right, catch them sleeping at the switch. That is something that could possibly happen. Mark my words, and see if we don't see it in the outside move. Outside move would blow it up to 48,000, right? But understand that this is being held down artificially. And but we've seen other markets where super big hedge funds are like, they're short Bed Bath and Beyond, they're short GameStop, and they're getting crushed by the little guy. So this could happen, right? Especially when they get very proud, because it's like for instance, when you're a retail trader and you're like winning and you're saying, oh my goodness, I'm shorting, and then it goes up. So like, almost short some more, it's short, and all of a sudden you think like you're invincible because you beat up the market for a while. And I've had that happen to me too. I'm beating up the market, the market just beats me up, right? So the Fed can say, we got the crypto market under control, we're suing all these people, and somebody comes in there and says, oh yeah, boom, boom, boom. I know that you're short like 20, and all I gotta do is pump in like 25 or 30 or 40, and now you have more demand than supply, and you can't cover me. So I'm just blown up to the short squeeze rally, right? All your stops are gonna get triggered, and this is gonna drive this thing up. And now what are you gonna do? You gotta find a whole bunch more to sell in order to push this thing down. And now you let the genie out of the bottle. You don't have the firepower really available to manage this outside event. Okay, so anyway, that's just so bulls versus bears. Technically I'm bearish, but I have a small inkling that this thing is going to blow out and throw them for a loop. I'm looking like this wedge kind of thing. It's going at an angle. I'm thinking we might blow out. Okay, so I'm thinking I'm slightly bullish on Bitcoin. Okay. So with that, I want to thank you very much for enduring this extra long broadcast of the Bulls versus Bears, brought to you by Espresso, homemade by Greg. And if you really liked what you heard and you think that you could learn from me, you probably could. And if learning how to if you want 1,351% sounds attractive to you, then let me know. I've got lots of guys in the chat rooms and things here within Elite Traders University who are hitting on average like 90% win rate, and that translates into about 5-10% per week. Okay, so you go ahead and do the figures. If you can make $2,000 a week, you're making $100,000 a month, right? And if you can do that, or if you got a prop account, like I have guys that have crossed over, big congratulations to Cobus, because he hit. Not only did he hit, let's see, he hit 98% win rate in his live. 98.61% win rate, 1.39% loss. He plays 78 trades. Okay, so he is one of my master traders who's gone through our system, and so it's a very, very powerful thing indeed. We've got a number of students who have have doubled and tripled accounts, and that's part of our benchmark is that you can double an account within a couple of weeks and be able to like Pranan did. She made 6 figures, you know, with a finance degree, 168%, right? Very happy indeed, you know, for her. And in fact, she here's her trades, and she was with a competitor, you know, she was with a competitor, course guy, not, you know, nice guy. Not that he has the same name as me, Greg, but you know, that's pretty good for, you know, little old lady from Australia, right? From the Philippines via Australia, right? Not bad, right? I'm proud of her. She did a good job. She did an okay job. I can do better, you know. But my whole idea is to make you guys better than me. And so what I want to do is offer you something very special today only. I may lie about that. You may do it later. But what you want to do is to, I'm doing a coaching call, a $97 coaching call with me. If you want to speak with me and be coached by me for 1 hour, normally I charge $5,000 an hour, but I will do it to you for the low price of $97. Just email me at greg@elitetradersu.com and say, hey, nice, put the $97 special in there. Greg at, I don't have a link, elite tradersu.com, right? So the Greg at elitetradersu.com, email me and say, Greg, give me an hour of coaching. This is a Costco meatball. You ever go to Costco? Costco is a big warehouse store that we have in the United States. I think they have in other countries too. And then what you do is like they have these little ladies and they have these ovens and they have like little snacks, like little pizzas and little fish sticks and little shrimps and meatballs. The meatball and the stick is like my favorite. And I'll go around, maybe circle around, grab a meatball and circle around. And here, would you like another meatball? It's like, another? That wasn't me. That was somebody else. But once you get that meatball, like, let me go ahead and just why don't you just buy the bag? Yeah, let me just buy the bag, right? Why? You taste the meatball. Meatball is good. Yeah, it's like $19 for a bag of meatballs, but dang, that's a lot of love, right? My bag is almost empty. I gotta go back and get another one, right? So this is what this is. This is a meatball, $97 a meatball. And I'm gonna give you an hour of my time, the best hour that you'll ever spent with anything. And you get to see, hey, this is pretty good. You can take the information I'm teaching you and, you know, we analyze your trades. We'll go through different scenarios. Might even want to do some live trading together for the time we have together, right? Depending on what time you book. And, you know, I think that'd be very powerful. I think maybe trading with me might be kind of fun. You know, it might be pretty interesting. Maybe you make some money, maybe not. I don't know. You know, it really depends. You know, maybe you make a whole bunch of money. You know, maybe not that you're gonna make this much money. I mean, not gonna. You're maybe not going to make this much money. I got a loss here. I have losses. I'm human. It's okay. Right? I can't be right all the time. Right? But if you think $97 to trade with a guy that can do this is worth your time, you might want to try it. Maybe try it. You like it. Mikey likes it. He did anything. Look. Anyway, that's my offer for you. Go ahead, email me at greg@elitetradersu.com, type $97 and yes, and I'll send you a link, a booking link, and you can go ahead and register. And I look forward to teaching you and imparting my knowledge to you and helping you live a successful life. Remember, change your trading and change your life. If you're not happy with where your life is, it's because your trading is not where it needs to be. So I can help you solve that problem. My name is Greg McLeod, Dr. Greg McLeod from the Elite Traders University, and I endorse this message. Cheers. Bye now.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!